Hey, what's up, guys? I'm Cody Charnell, multifamily real estate broker here in Long Beach. And today we're going to be checking out this 18-unit building that just recently closed here in Long Beach. I think this is episode 6 of my property analysis series. The whole idea of this series is to, number one, keep you up to date on what's happening in the local market, show you recent closings and properties that are active for sale. But number two, it's to give you an idea of how to underwrite deals, get you familiar with different neighborhoods. So if you're getting any value out of this, it'd be great if you could like and subscribe. And without further ado, let's get into it. Okay, so just a little disclosure. I was not involved in this sale, so I don't have all the details. But really, I just wanted to show you, a recent closing so you have an idea of what's happening in the market. This property, like I mentioned, it's 18 units. The address is 111 West Del Amo Boulevard. It's, like I mentioned, in the city of Long Beach. This is it on the map, the little red dot here. So if we zoom out, you get a better idea of where this is. So it's located in North Long Beach. It's just north of Bixby Knolls, Los Cerritos, Cal Heights. And this is a Virginia Country Club. This is an 18-hole like private golf course. So really, really nice neighborhoods just to the south. Once you get north of this thin gray line, this railroad track, it turns into North Long Beach. Rents are much, much more affordable here, but all of these people who live in North Long Beach still have access to a lot of amenities in Bixby Knolls, like the Trader Joe's, lots of shopping and entertainment along Atlantic and Long Beach Boulevard. And within North Long Beach, there's a couple of great streets like this few blocks here. You have new coffee shops, new restaurants. Same with Atlantic. You have some good shopping and entertainment there. And you have some big developments going on. So right here on South and Atlantic, you have this big lot, which is being turned into 84 townhomes. If we go back here, so this is the subject property. This lot was recently developed into townhomes. So those are being sold right now. There's another project going on right here on 49th and Long Beach Boulevard, more townhomes, which will be sold. The neighborhood where this property is located is actually pretty convenient. So you have a middle school, an elementary school, and really easy access to the 710 freeway and the 405 freeway. So a lot of good stuff going on with location here. The property is located on Del Amo Boulevard, which is a busier street. So maybe that's a little detractor, but really giant lot. The property has a big courtyard here. And if we zoom in, you can get a little bit better idea of the building. So it's 2 stories with a courtyard, and there's a pool in the middle. Because this stretches from Pacific all the way to Daisy Avenue, you have garage access from both streets. So let's check it out on Street View here. So you can see on the one side, you have 6 garages. This one actually also has all new windows. So the property, you don't have to worry about doing that. When they sold it, they were partway through a renovation. Here you can see it from Del Amo Boulevard, and you can kind of see what the street looks like. And if we come around to the other side of the building, you can see 6 more garages here and all new windows on the side as well. So they were partway through a renovation. They updated the pool with new equipment, and they put a fence around it for safety. They also have remodeled 3 of the units recently, and there was a 4th one underway. So when we get into this one a little bit more, you can see average rents for these units. And this, I would definitely say, is a value add deal, but it was priced relatively well based on current income. So you get kind of the best of both worlds. If we go back to overhead view, it looked like this one, the roof was probably going to need some attention. So yeah, it looks like maybe some pooling when it rains. So maybe smart to budget for some roof repair, at least, maybe a replacement on this property. So, okay, so let's take a look now at the numbers. All right, so this is my pro forma for the property. So the building itself is 12,404 square feet. and divided by 18 units. Oops. That works out to about 689 square feet on average per unit. The property consists of 8 two-bed, one baths and 10 one-bed, one baths. It's 1963 construction. And as you can see here, the rents aren't terrible compared to the price. So two-bed units are rented for $14.14 on average. Market rent in this neighborhood is closer to $23.50. For the one-bed, one baths, those ones are also averaging about $14.23. $17.50 is about average for this neighborhood, maybe closer to $1,700. And then down below, we also have 12 garages with a parking space in front. So you can charge additional rent for those parking spaces. So because this is over 5 units, you're going to need commercial financing. So commercial financing, right now, most banks are offering 10-year fixed, or at least most investors are going for 10-year fixed loans. And then they go adjustable after that. Interest rates are right around 5.8%. And the big metric that banks care about is the debt coverage ratio. So in order to get a commercial loan, the bank is going to force you to put enough money down to make the property cash flow from day one. So they want you to hit a 1.2 debt coverage ratio. And in order to do that, you would need to put about 990 down, which works out to 30%. So this is actually better leverage than I've been seeing. Most of the time, you're having to put down more than this. So 40, 50% down is not unusual in the market today. To be able to put 30% down, this is a pretty great deal based on the current income. So purchase price. So they had this property listed at 3.995. So almost $4 million. And it ended up selling for 3.3 million, all cash. So significant discount on this one. Let's now go to the summary tab. So the gross rent multiplier is something that I look at all the time. So this one sold for 10.77 times gross, which is a better deal based on current income than I've seen anytime recently. And then once you get rents up to market price, this property is going to be operating at about 7.33 times gross, which is also an incredible metric for gross rent multiplier. So yeah, for value add deals, most of the time, at least recently, I've been seeing properties sell and you can get them down to about 10 times gross, maybe slightly below that. But for this property to sell at 10.77 times gross based on current income, and you can get it down further than that, this is a pretty incredible deal. So because this is over 15 units, you're going to have an on-site manager. So that's a little extra expense. You're also going to have extra expense from the pool. So expenses on this property, I'm assuming that they're going to be higher than a typical apartment building that's below 15 units. It doesn't have the on-site and also doesn't have a pool. So expense ratio will probably be a bit higher on a building like this. I did add in an expense for the pool down below here. It's a little bigger. So you can see there. We also have license. Okay. So based on the current income, after we take out expenses for vacancy, also all of the expenses in our column here, and our mortgage payments, this property is going to be cash flowing about $32,000 per year. But once we get it up to market rents, the cash flow jumps significantly. So in order to get rents up to market price, you're going to have to renovate some units most likely. So 3 of the units have been renovated already. So there's 15 left to go. So if we budget, let's say $30,000 to renovate those 15 units, so $30,000 per unit, plus let's say $50,000 if we want to budget for a roof, that's about a $500,000 renovation budget. So the question is, if we're spending $500,000 to upgrade this building, how much additional value is that going to add? So if we buy for 3.3 and spend $500,000 upgrading it, I'm expecting that you can resell this at, let's say, 12 times gross to be conservative. The way the gross rent multiplier works is basically it gives you a price based on a multiple of the income. So if after we fix up the units and raise rents, we're getting $435,000 in gross income. We multiply that by 12. That gives us an idea of our exit value. So based on those numbers, the property would be worth about $5.4 million once it's upgraded. So that's an increase of $2.1 million. So your $500,000 renovation budget will increase the property value by 2.1 million, which in my opinion is totally worth it. Really interesting value add deal. You also have the option to take it a step further. You could look at adding ADUs. So on a multifamily property, you can convert garages into ADUs. You can convert and add up to 25% of the existing unit count. So this is an 18 unit building. So if we multiply that by 0.25, that means you can add up to 4 additional units through conversion. So you could, let's say, take away some parking, add 4 more units. And if you were to do that, let's say you add 4 1-bed, 1-bath units. And let's say each 1-bed, 1-bath is going to take away 2 garages. So that means we're taking away 8 garages. So 4 will be left. You'll still have driveway spaces where the garages used to be, like in front of where the garages used to be. So you're not taking away all the parking. And we're going to say that those new ADU units also rent at $1,750 per month. And we're going to say that on average, each ADU is costing us, let's say, 120 grand to do the conversion. So that's an additional $480,000 that you'd be spending to add those 4 units. And based on the income, that increases your value by, I think it's about 800 grand. So let's see. So we were at $5.2 million before, roughly. And then with these units, we're taking a value up to 6.2. So yeah, great value add potential with this property. I really like this deal. So let me know what you think about this deal in the comments. Is this a property that you would have invested in? For the full financial spreadsheet that I have here, I'm going to link to it below in the description. My goal is to put out one of these videos per day. So if there are any properties that you'd like me to analyze, please feel free to send them my way. And again, thanks so much for watching. And remember, invest well, trust Cody Charnell.